In today's video, I'm going to be showing you how you can take this simple strategy and become a profitable trader. So without any further ado, let's get straight into this video. Now first, I'm going to be showing you guys a live trade that I took on January 4th. And I'm just showing you guys these things so that you guys can see that this trade works in real time. So just watch this. I'm going to do a little bit of commentary to show you what's going on. And then later on, we're going to break down the strategy as well as provide some other examples as to how to use and trade this strategy. Now, as you can tell by the video, it is sped up a little bit just so you don't have to sit through the entire thing. But I'm going to explain to you what you're looking at right here. That purple zone you see at the bottom is a point of interest. It's a very sensitive part of the market that I marked up where every time price returned to that level, it's been bouncing off of that in the past. And even though we were in a downtrend, I had confidence to take this trade because of this strategy that I'm about to teach you. Now, you can also see that I've entered at a particular point on this chart, and I've entered on a fair value gap. Now, you can also see that I've drawn a second fair value gap, and it was just to illustrate that there were multiple opportunities to get into this trade. The first fair value gap was my preferred entry, which I entered on, but the second one was just in case you missed the first entry, there was another fair value gap provided inside this trade, and you could have taken that as well. And as you can also see, there's a third one here that I marked up that you could have taken as well, just to prove to you that with this strategy, there are multiple areas that you can enter, and I'm going to be showing you that right now. So the first thing you want to do, as you can see, I'm on the 1 hour time frame. The reason why we use the 1 hour time frame is because it gives us a good understanding of the general direction of the market. Once you understand which direction the market is going, for example, in this situation, we're going towards the upside, so we're in an uptrend. Once you determine that, you can then have your bias for the day. So because we're in an uptrend, we want to go ahead and set our bias for buys. So we're going to be looking for buys today, nothing else. Now, the second thing you can notice here is that I've marked up my support and resistance area. This just helps me to know the point of interest and the sensitive spots in the market. So as you can see in this particular area or on this particular zone, there's a lot of touches. Anytime the price comes into this area, it either shoot down or it'll shoot up. And it does this multiple times. So this tells us that this is a point of interest that the market may reject off of. So with that in mind, let's go ahead and position ourselves to take a trade when price returns to this area. We're going to be using this strategy only during New York session. So let's go ahead and scale down and see what we can find. So as you can see, it's currently Friday and it's 7 o'clock, which means price has hit our area of interest, but we can't take a trade yet because it's not 8 o'clock. So let's scale down to the 5-minute time frame and let's see what we can do to enter our position. Now, the third part of this strategy is whenever price gets to your area of interest or your point of interest, you want to look for what they call a change in character. What does that mean? It means we were going lower high, lower low, lower high, lower low, lower high, lower low. What we want is a higher high. And once this new higher high forms and breaks structure and changes character, we then want to look for some confluence or some other area of interest we can take this trade at and then go towards our take profit. So as you can see, it's currently 8 o'clock. Like we said earlier, we're only going to be taking these trades during New York session. So now that it's New York session, we're going to go ahead and wait. So once price reaches this zone right here, we're going to look for our trade pattern, which is the lower low, lower high, lower low, and then a higher high. And then we're going to take something, whether an order block, a fair value gap, or anything we can identify that could be a strong confluence factor. And we're going to take that for a 1 to 2 and exit our trade. So let's see how price develops. Okay, so price has currently entered this area here. And now, like I said earlier, we're waiting for our pattern. What's our pattern again? We have the lower high, lower low, lower high, lower low, and we need price to break this level. All right, once it breaks this level, we take an order block, a fair value gap, something from here towards the upside. So let's see how this goes. All right, so now you have what they call a break in structure. After this break in structure, we now can wait for a fair value gap. Now, in this case here, we can see we already have a fair value gap, okay? Now, this would give us a nice sniper entry. But what I've learned is that you want to take these order blocks or fair value gaps or anything you're looking at that is close to or is in confluence with something else. So for example, if this forms another fair value gap, we have not only another fair value gap over here, okay, so that would be in line with that, but we also have an order block right here. So order block, fair value gap, and when you look at it from this standpoint, you kind of have an area here too that was a bit of support and resistance, right? And so you have a couple things that are within this entire area here, okay? This entire area here that I've highlighted has about 4 factors that if you put together and take the trade from anywhere around that area, that gives you a stronger or a higher chance for your trade to succeed. So let's get rid of all of these. So we're going to keep our breakup structure here one last time, and let's see how this trade develops. Okay, so now that this trade has fully formed, you can see here there's another gap right here. Now, again, if you want a sniper entry, you can wait for price to reach this area, but I prefer to use this gap only because of the reasons I stated before. So I'm going to go ahead and put my entry to right here. And I'm going to put my stop loss right below the recent swing. Now, we can easily put this here and go for a nice 1 to 2. But then our trade doesn't have that much room to breathe. Considering there's another gap here too, that can make it just a little bit risky. What I like to do is just put it behind the last swing point. So let's do that, aim for a nice 1 to 2 and see how price develops. Okay, so now we've been entered into the trade. And now that we're in the trade, we're going to see how price reacts to this zone. Now, I want to mention something while we're here. When price is closing above the fair value gap, that's a good sign that price is respecting it. So if you want, you can wait for price to close like this and then just enter the trade. Maybe you can enter from here. Okay, put your stop loss just below and aim for a 1 to 2. You can do that if you like. Let's continue to see how price develops and see if we can win this trade. Okay, so now we have price again coming back to this level. Okay, so here we are. Price has entered this area multiple times. So this gap was very valid, a very strong gap. Now, if you notice, price did not come to this second gap. Okay, so that's why it's good to take the one that is around the most confluences so that you can get a really good strong trade. And let's see if we end up finally breaking this trade, and we do. All right, so here we go. We've gone ahead and hit our 1 to 2, and that's all she wrote. Now, while you're going through this trade, sometimes your emotions can be all over the place, but you got to trust the process. Just let trades develop the way they're supposed to, and I promise you this is how you get consistency. So this is a pattern that you see over and over and over again. As you can see, price came down here. In fact, let's go back here and see. Even though we couldn't take trades at these times because they were out of our zones, let's see what happens at these levels. We have price come down this way. Okay, and again, what are we waiting for? We're waiting for that lower high, lower low, lower high, lower low, lower high, lower low, and then a higher high, and then something from there to go off of. Okay, and let's see what happens. Price comes up this way. This is 1 o'clock. All right, starts breaking structure. Now, we want a close of a candle like this. We don't want wicks. Wicks are very deceiving. So now that this has happened, we're waiting for some sort of fair value gap or something we can use to take it off of. Now we have an order block here. Okay, so you can say when price returns to this area, I'm going to take my trade. All right, so let's see. And this time we're just going to put it right there just to be on the safe side. Aim for a nice 1 to 2. Even though this trade didn't go our way, we almost hit our take profit. So in cases like this, when you are up heavily on the trade, you can always move your stops to break even. All right, so price did stop us out there, but we're still at this zone. Okay, we want to see if it still develops our pattern. Okay, so there you go. So let me get rid of this real quick. We can see that price has broken structure over here. And price came over here. And now we have a fair value gap. So what I'm going to be doing is I'm going to be entering at the entrance of this gap. And like I always say, we're going to take our trades for a nice 1 to 2. Let's see if we can get that. All right, let's see. And there you go. And just like that. Here's another one. Okay, so we had 2 trades. Out of the 2 trades, again, none of these are really within our time, so we wouldn't be trading this. That's why I said only New York session, because you want to avoid weird things like this happening. However, this pattern where you get the consistent low, lower low, lower high, lower low, and then a higher high, that works. Okay, so as you can see, we could have even aimed for more, maybe a 1 to 3 if we wanted. Okay, maybe we can aim for some other areas like the top here, right? Let's see if we can get to that level. Let's see. There you go. Okay, so price ends up hitting that area. And so my whole point is, once you follow this pattern, as you can see, we took 3 trades, we won 2. That means we would have won 4%, we'd be down 1%, and that gives us a total of 3%. Okay, now this is if you're only going for 1 to 2s. You can go for much more, but for now, like I said, you just want consistency. So that's going to be it for this video. Hope you enjoyed it. Let me know in the comments below if you have any suggestions or comments, and I'll catch you in the next one. Peace.